But before we get into that, I wanted to take a moment because I think it's take advantage of the topical issue. In previous podcasts, we had talked about earlier in this year, we saw a shift from growth into value. And we urged our listeners not to jump ship just because we have a temporary shift in a preference of the type of stock. And one of the things that we saw this week, or last week, I should say, is we saw Nike explode 16% in one day. Nvidia has taken off. AMD has taken off. PayPal, which is a favorite of ours, has taken off. Shopify has done very well. So these are all the traditional growth stocks that had done very well in the previous years and the years prior to that. And we saw them explode again. And I think we want to take that lesson to remind ourselves why we have to think long term and why we don't feel the need to be all in or all out into a stock or an investment.
Yeah. And it's another lesson in like the contrarian investing where if you miss the run, in the market, if you're just patient and you make smart decisions, everything will come back. Don't listen to the talking heads on CNBC or wherever where they're saying you need to sell all your growth to buy value but when they're saying that value is already up 10%, right. So you missed it. So you just lick your wounds, and then either you can start adding to value, like if you think that run's going to continue, or you can continue to add into quality companies that are growth companies. But the worst thing you can do is just sell out of all of your growth because everyone says it's value now, and then you miss the run in both, and then you'll quickly dwindle to zero.
I think that
it's the lamest way to lose money.
The thing that you have to remember is the news that is put out there on social media, on your CNBC, is all for that day's news. It's for traders. So it's designed for somebody who's making a decision and might be selling a stock relatively soon. So when they're saying that XYZ, if they're saying that growth is not popular for how long? For a month, for 2 months, for 6 months, for a year? And we have always hit home on stop worrying about if it's a growth or a value stock and worrying about the quality of the company. We had stated when a lot of these companies were reporting earnings and they were getting beat up, you and I had said, it's just a matter of time because the market can't ignore these earnings forever. And that's what we saw. I think we finally saw a tipping point there with some of these companies. They just exploded. And had we not been patient and been willing to be foolish for a period of time and look stupid for a period of time, while value was taking off, if we would have sold out of these growth stocks, we would have missed out on a tremendous run.
Yeah, I mean, just to give some tips, some stocks that haven't come back yet, like Alibaba has gotten beat up pretty bad, still hasn't come back. It's one of the reasons I looked at AMD, and Salesforce was the one that we were just sitting on for a while where it just wasn't moving, it wasn't budging, but the interior numbers, all of their metrics got better and better and better, but the stock wasn't moving, and those are usually signs for good opportunities.
That's the struggle that I have with new clients who have maybe never been into investing and they want to have individual stocks. And I just did a podcast while you were on vacation. I told everybody you were in Nashville and you were in South Carolina, right? North Carolina. I can't even get the state right.
Yeah, geez. Yeah, the Outer Banks.
But I did the podcast on.
Do I look tan? Is the camera picking up my tan?
I think tanner is the word.
Yeah, tan. Yeah, I'm definitely not tan. I'll never ever be tan.
But getting back to the idea of stop thinking in a calendar year with your investments, because if we're buying a stock, typically we're buying it as long-term investors, we're buying them for 5 years from now. And you had mentioned Salesforce. I remember having a meeting with a client who we had picked up Salesforce for them as a holding, and she was talking about how it seems like it had underperformed, and it had underperformed. But if you look back, if you can scale that back to a 2-year, a 3-year, a 5-year mark, I think you'll see these companies that are the companies that are pushing this market forward. They will outperform the market.
When in doubt, zoom out.
When in doubt, zoom out. That's a perfect example. Well, and
I didn't come up with that.
No, the thing to remember, though, is I think it is natural to feel not confident in the moment. So in the moment when we're seeing these things that we love sell off, if we're seeing them not perform, and let me give you a personal story here. And this is what I do for a living. So we have a client who Nike has been part of its portfolio. When we decided to build this portfolio for him, we decided that Nike was going to be a component in that portfolio. And every time that Nike was dropping, this is the previous weeks, every time Nike was dropping below $134 a share, I would pick some up, and it would drop to 133. I would pick some up, 131, drop some up. It dropped to 128, and there was part of me that was questioning it. Am I making the right move? But when in doubt, zoom out. Nike's a company that has a long history of growth. They have brands like the Jordan brand. I just read an article that Nike is still raking in billions of dollars because of that Jordan brand. And Michael hasn't shot a basket, at least in a professional game, in almost 20 years. So,
are you sure they're not buying it because of his baseball card?
They could be.
That's probably what. Yeah, that's. Yeah.
It could be. So, even moments in time, and this is what I do for a living, I question whether what I'm doing is correct. But ultimately, you have to stick to your thesis. If you're investing in quality companies, it will win out in the long run.
Yeah, I mean, a good example for me would be even Nvidia. I know like it's clear as day right now because it just hit an all-time high today. We're recording on the 28th of June, but like for the longest time there, it wouldn't break past. Like it was hovering around 500. Like 5, and then it'd be like 525, and that was a big deal, and then it'd come back down below 5, and then it just kind of bobbed in there for a while before it really broke out. But we knew like the thesis was stronger and getting stronger than ever, and then like I kept adding to that position, and it's finally starting to pay off. So,
yeah, and for listeners who are not aware, Nvidia makes these chips, graphics processing units that are in super high demand, and we're in a situation now where we have a chip shortage. So yeah, in hindsight, you look at this and you say, yeah, that made total sense. I shouldn't have been concerned at all. I should have been, piling money into Nvidia while it was down. And the same thing could be said about Nike. And the fact that you look at the thesis here that we had going into this is when you have COVID begin to break and people are going back to work and they're out buying clothes again and they're playing sports again, Nike should benefit tremendously because of that. And we found that they did.
I mean, you really knocked that one out of the park. You called that one in January with our stocks for COVID Light 2021, and you said retail was the winner, or retail was a winner, and you said Nike and Lululemon. So yeah, you've been calling that one for a while, and it was shot up 16% post earnings. So yeah, you really knocked that one out of the park.
Yeah, and I'm not looking to sell Nike anytime soon because again, that's something I'm owning long term. I think the future is bright to continue that. I think people will, as people get out into the workforce, get out into everyday life. I mean, we're recording this in Ohio. Ohio has opened up essentially back to normal from what it was before, but there are still states that have a little bit of restrictions involved.
Yeah. This is a good example for like contrarian investing where it's like, cause you've been calling Nike and you've been adding to Nike, but I actually have not been adding to Nike. So like it would be hard for me to open up a position in Nike now after it just jumped 16%. Yep. It seems like over the long term, like the entry point doesn't matter, but maybe wait for a little bit of a pullback there. But I mean, if you're holding it for the foreseeable future, like you're in the gravy now, like you get a big buffer of sleep easy at night with your Nike stock.
And today, the market's not closed yet, but today when I looked at Nike earlier today, it was selling off a little bit, a couple percent points down, which is not to be unexpected. Anytime something jumps, double digits.
Profit taking,
Yeah, people are going to take the profits on that. So that's something to keep in mind. Whenever you see something jump dramatically and you feel like you've missed the boat on that, wait a couple of days.
Just wait, yeah.
Yeah, because it'll probably come back down once people take profits, and then you can buy it for another run.
Yeah, I feel like in my limited experience, when I pay attention to like the trading activity post or before earnings, a lot of times it's very irrational, where they'll have a blowout quarter, but one sentence that the CEO said the analyst didn't like, and then it'll sell off, and then like that's perfect buying opportunity because usually in the next couple of days, like the market clears, everybody realizes that that's insanity, that they just had I forget which quarter it was, but PayPal had an example like that where they had the best quarter that they've ever posted in the history of PayPal.
I think it was last quarter.
And it sold off. It was either last quarter or the quarter before. It was pretty recently. And then like it sold off steep. Like it was, but it was insanity. Like there's no reason that it should have sold off. And I added to the position, and then lo and behold, over the next couple of days, it came back.
Yeah, it's up very nicely right now, and if you can be patient, you can wait a quarter, or a month, or 6 months, or however long. I mean, that patience, as I've stated numerous times before, is your superpower. I saw when you were talking about this insanity, I'm looking at the last Federal Reserve meeting, where they came out and they said We potentially see an interest rate hike or two by the end of 2023 or through 2023. And the markets the next day sold off. And then they've since got to their senses and came back because, come on, guys, 2023. And when they're going to raise interest rates, it's likely 0.25% at a time.
Sure. Yeah, they're not going to make big swings. And that didn't make sense to me. Like, it was perceived as a bearish move just because they mentioned that they were going to raise interest rates. But that was like if you were going to be as cautious as possible. Like, I couldn't even imagine a scenario that was more cautious than that. Like saying in 2 years we'll raise it maybe 0.5%, if that. It's like that seems pretty bullish for growth stocks.
Yeah, and it's got to be expected. I mean, eventually interest rates have to get off the ground for a number of reasons.
Yeah,
it'll help the savers out there, but two, when your interest rate's at zero, effectively zero, you don't have a whole lot of tools in your tool belt to operate from. So there's not a lot of moves that the Federal Reserve can make if we do begin to see a slowdown again.
Yeah, I mean, at this point, that type of move would make me more worried that the market's going to get too hot, and I'd be more worried about that than any pullbacks from an interest rate hike of 0.25%.
Right, I agree.